Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, AT&T plans to buy $23 billion worth of spectrum licenses from EchoStar, adding to coverage in virtually every U.S. market. Plus, the digital services tax fight re-escalates as President Trump threatens more tariffs and restrictions on advanced tech and chips in retaliation. This as we await a cabinet meeting with President Trump this hour. We'll discuss what to expect, but first we check in on these markets, which there is a macro story at play here that affects the bond market. Stocks actually pretty resilient in light of anxiety around French political drama, US Fed drama, and that we will go into, I'm sure, when we come to the cabinet meeting. But right now, we're up a tenth of a percent on the Nasdaq. Big tech still managing to push higher ahead of some key earnings this week, of course. But also, as we delve into an individual stock story that affects AT&T and EchoStar, let's get into it because AT&T off by 1.4%. It had traded higher earlier in the session as it spends big to extend its spectrum, its access to licenses, buying them from EchoStar, which, remember, the chairman of this company had actually met with the Trump administration. It's up almost 80% as they do what was willed of them to sell off spectrum. Let's get the details. Kelsey Griffiths is with us to dig into the details. What the market likes is that they're paying far more, well, AT&T is paying far more than originally EchoStar did for these licenses.
That's right. So we're looking at the stocks reacting pretty spectacularly to this deal that was announced this morning. And as you mentioned, Caroline, we are seeing kind of the latest step to resolve a regulatory probe over EchoStar potentially not putting its licenses to the highest and best use. We know that EchoStar met with the FCC chair, Brendan Carr, and also President Trump about a month ago. And both companies are saying that this is an important step forward toward resolving that probe.
That probe, which, well, those at EchoStar had said had distracted them from actually making the investments into using of the licenses. There was a threat of bankruptcy at one point. They weren't paying on their bonds. But tell us the AT&T side of this. Why spend big on these licenses?
Exactly. So AT&T is really kind of making the most of this moment. These mid and high band spectrum licenses don't come available very often because this is a limited and very valuable resource. And AT&T is really jumping on the chance to increase its portfolio and really beef up its spectrum holdings with this addition. So even though it's a lot of debt to take on right now, this is a really valuable investment in their future and something that customers are also going to feel the difference from pretty immediately.
They're going to feel the difference. Just remind the consumer, remind the audience why it is so expensive but so crucial to reinvest in spectrum to access.
Spectrum is what carries all of our wireless communications. It's what enables it. And it's sort of like a highway that gets jammed during rush hour. If you're not able to open up more lanes, then you're going to experience gridlock. And so AT&T is effectively opening more lanes on that highway to keep that wireless traffic moving.
I love that analogy. As always, we thank you so much for digging deep, Kelsey Griffiths, on all things telecoms. Let's get an investor take now. Ted Mortensen's with us. He's managing director over at Baird. They have a cool $525 billion in assets under management. What's so interesting is AT&T here basically reinvesting money they've saved through the recent budget, Ted. Are we going to see more companies commit to infrastructure in this way?
I think so. I mean, the big, beautiful bill gives a lot of flexibility on depreciation, writing off of assets. And I think AT&T had, a very, very big tax advantage, and they're going to put $3 billion in just into optical. I think what this spectrum buy is, low-band spectrum is incredibly limited. And it gives AT&T a long-term look at increasing capacity. And I'm sure on the roadmap is home internet and expanding that capacity and taking share via that, as well as long-term, the roadmap on AI at the edge is also probably relevant.
Very much so. John Stankey's come on this show to talk about exactly that, the need for data as we all become addicted to whichever chatbot we're using, Ted. What's interesting is we're just seeing the EchoStar stock reaction. In many ways, this is once again the administration playing a very key role in, as they see them, key assets, bringing in the chair of EchoStar to the administration because President Trump was worried about a potential bankruptcy of what he saw as a key piece of infrastructure. I mean, how much are you having to navigate this, an ever more active administration in big tech?
This is, I think it's unprecedented. You bring a great point up, Carolyn. This is unprecedented, actually having an administration that actually understands the technology issues, whether it be digital tax out of Europe, basically with additional tariffs, meeting with NVIDIA on getting through the China H20 issue. The topics that this administration is tackling is really in the unprecedented area on getting actually involved.
Ted,
and then you throw in Intel also.
Yeah, I mean, to that point, does the administration generally align with fiduciary responsibility of leadership to give money back to shareholders in many ways? Do you think that they're generally net positive for these businesses?
I'll pass on that question. I can only tell you what they're doing from the technology standpoint is they're rolling the rock uphill very, very quickly and getting through all the bureaucracy. It gives the U.S. a tremendous advantage from the technology standpoint if you look at going head-to-head with China on AI, but also from an infrastructure standpoint, we're years ahead of Europe right now, and having a non-bureaucratic administration that understands the issues around technology is a real benefit for the U.S. people.
It, though, does create perhaps sometimes just general uncertainty for businesses in the way in which they run. I'm just thinking of perhaps the threat that we just had today. We're going to discuss it more after this conversation, Ted, but how to tackle digital services taxes on Alphabet and Meta. He's threatening more restrictions on chips made by NVIDIA and AMD. Just how do you see tariff headwinds for companies, or can they see through them because the tailwinds of generative AI are just so huge?
I think there's a few issues. This is playing chess on 4 levels, to be honest with you. I mean, the tariffs long term, we'll see some inflationary impact to it. But I think what the administration's doing is they're looking at this, one of the most prolific builds that I've seen in 30 years of doing technology. They understand that the stakes on generative AI, whether it be AGI or actually agentic-based systems, it's crucial that the U.S. actually is in the leadership role and is developing AI in a way that if you look at the spend this year, it's over $400 billion, up 53%. We've never seen an architectural build like this. And it gives the U.S. economy and, quite frankly, our defense postures, a real advantage from a global perspective.
And so where is that mispriced in the market right now, Ted? Where are there opportunities?
I think there's tremendous opportunities on just looking at who has all the next generation technology. I mean, if you look what NVIDIA is doing with not only Blackwell, but the follow-on, the Rubin Silicon Advantage, Jensen's doing something that no one has ever done in technology from a systems approach. He's rewriting the architectural issues on high-performance compute, whether it be from networking, memory, to the core GPUs, but also these CUDA directories on software. He's got a 3 to 4 year lead on anybody in the world on doing this. So just from a NVIDIA standpoint and the picks and shovels that will go into Rubin, I would have your viewers do a fair amount of work on the optical space because Jensen is pivoting the whole architecture from basically a copper infrastructure to optical, and they're developing 1.6 terabit solutions that were on the drawing board that are getting accelerated.
And in your notes, as always, you talk about the optical options, Ciena being one of them, some of the other stocks that give you exposure. Ted Mortenston, so great to catch up. Baird Managing Director, we thank you. Now, coming up, President Trump fights back against Europe's digital taxes. We were just talking about it with Ted. Trump saying more tariffs and export restrictions could be on the way for those countries who impose them. More on that next. This is Bloomberg Tech. President Trump, well, he's vowed to impose new tariff and export restrictions on advanced tech and semiconductors in retaliation against other nations' digital services taxes. Now, the latest move raises uncertainty over tariff rates for U.S. trading partners once again. Bloomberg's Tyler Kendall joins us now from the White House. This is a recurring theme, the ire from President Trump around these basically European taxes.
Right, exactly, Caroline. In fact, you'll recall back in February, President Trump had actually signed a memorandum that opened the door for the second Trump administration to look into how to retaliate against digital services taxes, so-called DSTs, including renewing a Section 301 investigation into alleged unfair trade practices related to digital services taxes. So this has long been something that the Trump administration has taken aim at. Take, for example, in the first iteration of the One Big Beautiful Bill, there was that so-called revenge tax, Section 899, that was geared towards trying to retaliate against those countries that do have these taxes in place. We saw them basically derail the Canadian negotiations over trade earlier this year when Canada was set to collect retroactively revenue from the tax. Ultimately, they had to stop that collection period in order to keep talking with this White House. And perhaps most notably, and I know you were just talking about this in your last segment, we saw a delay in that joint statement between the U.S. and the European Union just last week when it came to their trade framework. And our understanding and reporting was it was because of this holdup ultimately on trying to get some sort of concession out of the EU when it came to digital trade and services regulations. Now, of course, our understanding has been that the European Union is pushing back on that and that they say that that's not going to be part of any trade deal. In fact, we got a statement earlier today from the European Commission spokeswoman who ultimately said that it's their sovereign right of the EU and its member states to regulate our economic activities on our territory that are consistent with our own democratic values. So it doesn't seem to be backing down there, though Caroline, our reporting had indicated that perhaps there were not these concessions quite yet in a bid to maintain some leverage as these trade negotiations continue.
Yeah, certainly when it comes to tariff-free treatment for wine and spirits, a bit of a tit-for-tat continues here, Tyler. But more broadly, it's interesting that President Trump is using sort of one part of the technology ecosystem against another, withholding perhaps access to chips if you stop hurting other big tech names such as Alphabet and Meta. How much lobbying have those sorts of companies done against these taxes?
Well, we know that there has been a huge lobbying effort here in Washington with private sector CEOs often visiting the White House trying to make some sort of meaningful movement when it comes to the policy decisions by this administration. And we've seen that perhaps most at the forefront when it comes to those tariffs or pending tariffs on semiconductors and chips. And as you well know and I report on every day on this program, we are trying to start to glean those details on what those tariffs are actually going to look like. And it has to do a lot with the administration pushing that it wants to see more U.S. direct investment from these companies and shifting their supply chains here to make these products and these goods. So it's something that we're watching very closely here. But of course, it comes sort of at this tension point as the White House tries to protect this domestic industry, but also by putting on these export controls could ultimately end up harming the competition moving forward.
Tyler Kendall, we appreciate it from the White House. Let's get the European perspective on this. Bloomberg's Peter Elstrom now standing by in London. Europe is very committed to these taxes, whether or not it is some sort of bargaining chip mentality or waiting what the OECD eventually does in terms of leveling the playing field on taxes on such big juggernauts. But remind us, 2019, France first put it in.
Right. Yeah, that's exactly right. Now, Trump was not specific about which countries he was criticizing here for having these digital service taxes. As you alluded to earlier, the spokeswoman for the EU said that it's our sovereign right to impose these taxes. And then she went on to say that we're not targeting any particular company or country where these companies are coming from. But in the end, this is essentially a lot of European companies taxing a lot of American companies. You have taxes on things like search engines, i.e. Google, on digital advertising like Facebook and Meta, and also on streaming services like Netflix in particular. So you did see this start with France in 2019, where they imposed a tax. Now you've got other countries like Austria is taxing advertising. You've got Poland that's taxing digital streaming services. And here in the UK, they're going after search engine revenue and advertising too. So it is a bit of a patchwork of taxes at this point, but they are getting imposed. And now this broadside from Trump is saying, we're going to retaliate if, in fact, these countries proceed with these kind of digital taxes.
But as we can see from this graphic at the moment, it's a nice little earner for countries such as France to get about $750 million per year by getting these sorts of taxes on revenues, Peter. More broadly, could we see not backing away with Canada, but certainly a view from companies that are actually based out making money in Europe like this? Is there anything that Meta and Alphabet have tried to do to restrict the amount of ultimate revenue that is going in that direction to Europe?
I mean, certainly these companies, as Tyler was alluding to earlier, they've been lobbying a lot within Washington. They've also been lobbying a lot here in Europe to be able to get some sort of advantages, whether those are tax advantages, relief from some of these taxes in particular. They've been pushing very hard to be able to do that, and they have not been afraid to go to the Trump White House to be able to get their backing to push back on some of these issues. Sometimes it's been about free speech online, sometimes it's been about taxes, sometimes it's been about their treatment. It's partly because the U.S. does have the biggest technology companies. They are very active in Europe, and they want to be able to affect the playing field as much as they can to their own advantage.
I have to see also how an OECD agreement could change all of this. Bloomberg's Peter Elstrom, it's so good to get the European perspective. We appreciate it. Now, coming up, Elon Musk says Apple is unfairly favoring OpenAI on iPhones in a new lawsuit. More context on that next. This is Bloomberg Tech. In a new lawsuit, Elon Musk alleges that Apple and OpenAI are thwarting competition, saying the tech giant is unfairly favoring OpenAI across its iPhones. Joining us now to discuss is David Balto, antitrust lawyer, former policy director of the Bureau of Competition of the FTC. We come to you for your expertise in competition. Is there a leg to stand on here, legally speaking, that with a partnership and allowing OpenAI basically to be intertwined with Siri, that it's stopping fair competition for the other Gen AI chatbots?
Well, I'm afraid this is a case that's not really going to launch. The Apple has a broad range of power to select who it's going to partner with. And I don't think there's a really compelling story here that competition is harmed through the arrangement that Apple has made, which seems to be clearly consistent with mainstream antitrust law.
Okay, so if he doesn't have perhaps the legal leg to stand on, maybe this more of a public relations argument in many ways, is there anything he can do about the ratings within the App Store, do you think, and the way in which that is deemed to be biased or not?
You know, I think Apple's been tested on this in a number of areas. And of course, there's been litigation in this area. And I think Apple's quite careful to make sure it's not violating the law. And just, fundamental principles of competition law, Apple has the ability to decide who it's going to partner with and what those arrangements are, unless it's, unnecessarily exclusionary. It really prevents rivals from being able to effectively compete. And here, Apple has said in a straightforward fashion, this arrangement is not exclusive. This is a question of just Elon Musk coming to the table with Apple and coming up with a better deal to convince them to include his AI product.
Yeah, because the idea was always, when the announcement was first made by Apple, that other third parties will be invited to the table. Of course, there's an ongoing antitrust investigation that overwhelms perhaps Alphabet at the moment and the way in which payments go between Apple and Alphabet. But certainly Gemini AI getting closer to Apple. We know that maybe a Perplexity, others eventually will make some sort of agreement, and that could iron out any antitrust issues?
Yes, I definitely think so. But, this is Elon Musk, again, trying to use the muscle of the antitrust laws to coerce a rival into entering into arrangement. That's just not going to work. A court's going to see right through that.
Okay, you say it's once again, we do know that Elon Musk has, I think, leveled at least one or two cases, the direction of OpenAI, and OpenAI have now been calling it harassment on that respect, but he's never really targeted Apple before. How much is it a distraction? How expensive is it for companies to do this?
Apple has very strong armor, and they're used to this area. There's a cost with being a firm that develops very successful products and has an important market position. And that cost is you're often subject to these types of antitrust suits. Apple's a very well-counseled company. I'm sure that they've figured out ways of entering into this arrangement with OpenAI that do not put them in hot water.
And what's also interesting in the context of all of this is that Gemini AI is the competitor owned by Alphabet, which of course has the Android ecosystem and relationships with Samsung that of course integrates, therefore, Gemini AI. Is that part of the argument also here, that plenty of people are downloading apps, plenty of people have standalone use cases, these chatbots, and it's not just using OpenAI purely through the Apple ecosystem?
I think that's true, and but there are plenty of alternatives, and this is just a question of being able to enter into a business arrangement. Musk may not like the terms that Apple is offering him, but ultimately the antitrust laws, the purpose of the antitrust laws, Justice Brennan said 60 years ago, is to protect competition and consumers and not competitors. And that, basically Musk is asking a court to stand antitrust law on its head and put it in a position of protecting his interests and not the interests of consumers.
Now, we appreciate all of your expertise throughout all of this, of course. We want to just break some other news when it comes to the legal system right now. And we understand that a lawyer for Lisa Cook, the Federal Reserve's Lisa Cook, is saying that they will file a lawsuit challenging the firing currently being demanded by, of course, President Trump. We knew that Donald Trump had made moves to oust Federal Reserve Governor Lisa Cook following allegations that she had indeed falsified mortgage documents. It's a dramatic escalation in what has been an ongoing battle the president has been having with the Federal Reserve. It's unnerved some investors. We've seen that in the bond market earlier today with yields pushing higher, particularly at the 30-year. The dollar has been coming lower. And now we do get a statement, it would seem, from the lawyer of Lisa Cook of the Federal Reserve saying that they will file a lawsuit challenging this firing. It is ultimately something that is likely to be discussed at the cabinet meeting that we will take live for you in a little bit as and when it gets kicked off. But for now, we do want to say our thanks to David Balto. He's the antitrust lawyer who was just discussing that fight between Elon Musk, OpenAI and Apple. But coming up in the tech space for you now, investors are waiting NVIDIA earnings for a gauge in the chip sector as President Trump vows potential new tariffs. That's next. This is Bloomberg Tech. Welcome back to Bloomberg Tech. We take a look at these markets with actually stocks remaining relatively resilient in the face of what is a concerning picture for the Federal Reserve that's irking some market participants in the bond market. Now, I look at a 10% higher on the NASDAQ 100. Big tech on deck in terms of their earnings later this week. We'll dig into that in a moment. I wanted to shine a light on the 30-year bond right now. Yields are up some 3 basis points. You are seeing pressure on the bond market at the longer end and on the US dollar, which is lower today, as that fight between Lisa Cook of the Federal Reserve seems to be amping up versus President Trump and his call for her resignation or her firing. We understand from a lawyer for Lisa Cook that indeed they're going to fight that and challenge that with a lawsuit of their own. We'll turn our attention to that a little bit later, but for now we want to get back to what's really dictating trade here in the tech markets. I'm looking at what's happening in the semis index. We're up 0.7%. Look, we're having a nice day for AMD. At one point it's up more than 2%. A deal with IBM. They're partnering on the future of technology, the use of GPUs when it comes to quantum computing, and we saw a nice rally in AMD on the back of that. NVIDIA up 0.7% as many wait with bated breath for their earnings after the bell tomorrow. Ian King is the man we can do that with, of course. He owns the semiconductor coverage for us at Bloomberg. And Ian, many wait for NVIDIA as some sort of macro bellwether here. For me and for many, it's got to be whether we get any clarity on China, right?
Yeah, no, this is the big confusion. I mean, the underlying market for this company's products is looking fantastic according to all of the indicators that we're seeing. But this one market, which is the biggest market for semiconductors, but not that important for NVIDIA, is this massive swirl of uncertainty. What is the US government going to do next? What is the Chinese government going to do next? What products will be allowed to be shipped there? And the unfortunate problem is we don't know too many answers here, and that is what's kind of muddying the waters massively, because even though it's relatively unimportant for NVIDIA, there's still multiple billions of dollars at stake.
In talking of swirling and uncertainty, yet another element to that was injected with President Trump once again saying that maybe he'll increase tariffs on certain semiconductor chips to those that impose digital services taxes. He means basically Europe. There's no stock reaction to that. So does it feel as though that sort of element of things is priced in? Do we think that that could become a reality? We're still waiting on certain semiconductor tariffs to come in.
Yeah, I mean, you talk to investors as well, and I think the reaction you'll get is the same one that I get, which is, how can we worry about what we don't know, what seems to change from one day to the next, what doesn't have a very constant element to it, whether these things come and go. It's obviously a lot of negotiations being done in public. There are concerns, of course, because this country exports a massive amount of technology in some respects and imports a lot in others. But really, it's the impact on end goods in terms of semiconductors that's been the big concern so far, rather than the pure sort of impact on raw imports of chips, which aren't that huge.
And with nervousness, going back to perhaps access of H20s to China, comes in always the exuberance of what's next. Just take us up to speed with where are we in terms of getting actually sort of dumbed down, to use a technical term, Blackwell chips into China in the long term. That seems to be where we're all talking about now.
Yeah, I mean, this was something that was hinted about by NVIDIA, and then President Trump went out and said, oh, hey, yeah, if they bring me one of these, maybe I'll look at it and maybe we can make a bit more of a revenue cut on that one too. And that would be a move forward for NVIDIA. That would give them a path forward to having, to keeping their Chinese customers at least a little bit happy, not as happy as they would be if they could buy everything, of course. So that's, again, we're going to be hearing, I would imagine, from the NVIDIA management tomorrow. They'll certainly be asked about this. And people want to know, is like, can you find a way to stay relevant in China? And if that happens, then I think there would be a sigh of relief and maybe some of the tension would go away. But right now, there's just a myriad of questions that we don't know the answers to, unfortunately.
But still an expectation for at least sort of 50% growth on earnings per share and indeed revenue. We anticipate that after the bell tomorrow. Ian King, so great to speak with you. Thank you. Let's get the investor take. Chip sector, Beth Kindig, IO Fund lead tech analyst, with us now. The China overhang, Beth. How much does it matter to the investor base right now?
Yeah, what I would say is all the information around China is important to consider. It is going to be a couple $2 billion impact one way or another. And there were so many sudden shifts going into this print around whether China was going to take that supply or not. But I would say ultimately any dip should be bought. And this is where, a broader view is extremely important right now. The market has never seen a product like NVIDIA's previous GPUs, Hopper, ever. Nobody in the tech industry has seen that before in terms of the amount of revenue it drove. Now imagine they have 2 generations of GPUs, Blackwell and Blackwell Ultra. They are simultaneously preparing to ramp. So this is going to be a back half loaded year for NVIDIA. And that piece, I would not let the China noise interrupt that piece.
Okay, talk to us about, therefore, the scale of the demand issue that they face. Everyone says this is not a demand issue. They've got plenty of it. It's always a supply issue. How much cannibalization goes on into ultimately what happens with the older GPUs? How much have you seen in your numbers and your data crunching real appetite and sales of the latest Blackwell architecture?
Yeah, to keep it simple, we still see alpha here. A year ago, I had put into print in an analysis, we would see a 50 billion data center segment by the close of this year. Analysts had 33 billion. Now, this quarter, with only half the year through, we're at 41 or 42 billion for the data center tomorrow evening. Wow. Meaning the likelihood we close this year at 50 billion data center is very high. Now, keep in mind, this is still happening for next year. Analysts are far too low, not only with their NVIDIA estimates, but their CapEx estimates. So we get to look at both things, right? We get to look at how NVIDIA is preparing to ramp these GPUs. And we also have a beautiful number around the demand in CapEx, perfectly packaged for us. And it's blowing away analyst estimates as of 2-3 weeks ago when Big Tech reported.
So how big could NVIDIA become?
I have a 200 billion data center segment, over the next couple quarters. I think we see a 300 billion data center segment, which would translate to a 6 trillion market cap off Blackwell and Blackwell Ultra. I like to go by GPU generation. That's how I formed this thesis for 7 years. So Blackwell Ultra, we should see 6 trillion from NVIDIA. And again, on a run rate, 200 billion to 300 billion data center revenue. So I'm talking potentially another 100% between now and the close of fiscal year 2027.
But we're not even talking about Rubin, which, of course, Jensen Huang's been over in Taiwan talking to CSMC about already. So scale that again. Where do we go from the 6 trillion?
And that is where, that's a great point. And the one reason I haven't brought up Rubin is I would want to see more of the AI data center energy problem resolved. And that is where diversification within the energy area, these companies that can provide time to power is a great way to position once we go into Rubin, which will really push the upper limits of what the grid is capable of today.
Okay. So therefore, you're thinking about the power providers. You're thinking, though, even in these edge cases, there are other chip companies out there desperately trying to show their prowess when it comes to energy efficiency. Do you dare to go there, or is it more actually the underlying infrastructure?
I think it's a combination of looking at alternative forms of energy. And what I would say is that right now, we are all really focused on CoWoS capacity from TSM and the supply and the hardware side. Where the constraint will become is the power side. And that piece needs to be resolved somewhere between Blackwell Ultra and Rubin.
And so that is a bet on a GE Vernova or like a company that's going into nuclear, or is it somewhere else, Beth?
Bloom Energy is one that we've held successfully. They solve that time to power. Nuclear can take many years to build out. And again, we're really looking pretty soon here, as in like these GPUs are just going to sit on a shelf if you can't power them. Nobody wants that. Nobody's spending their CapEx for that reason. So Blackwell Ultra is really nudging the power supply deals we're seeing. But now Rubin's going to require it. And I think it's somewhere between, the next 1 to 2 years where a great AI portfolio is diversified with exposure to energy.
Beth, buying on weakness. Beth Kindig, it's so good to catch up with you with a deep fundamental analysis of IO Fund. We thank you. Coming up, why 2 Texas senators have made it their mission to bring one of NASA's retired space shuttles to Houston. That's next. This is Bloomberg Tech. SpaceX delayed a critical test of its massive Starship rocket again just a few minutes before liftoff yesterday, citing unfavorable weather conditions. Now, Starship was slated to take off on its 10th major mission from the company's South Texas launch facility called Starbase. SpaceX says it is targeting another flight test window tonight, starting at 7:30 p.m. Eastern Time. Meanwhile, elsewhere in Texas, 2 senators, Ted Cruz, John Cornyn, are on a crusade to bring one of NASA's retired space shuttles to Houston. But that could be a logistical nightmare. Bloomberg space reporter Lauren Grush has been writing about this. Lauren, the basics. Where are they getting it from and for what reason?
Well, there's still some open questions about exactly which shuttle that they want, but it's pretty clear that they ultimately want Space Shuttle Discovery, which is currently at the Smithsonian in Washington, D.C., or in the Washington, D.C. area. And for them, they say they're righting an egregious wrong that happened back at the end of the shuttle program when those shuttles were allocated to different cities and museums. At the time, the people making those decisions said that they prioritized visitors and how many people would actually see the shuttles when they were over. But to them, they felt like Houston, which oversaw the space shuttle program out of NASA's Johnson Space Center, should have received a shuttle because of that tie to the shuttle program. Now, and a shuttle that's gone to space, specifically.
What's extraordinary is you've done your digging and sort of gone through the One Big Beautiful Bill, as it was known, and the Act had a provision for space vehicle transfer of up to $85 million. I mean, talk to us about the logistical issues here and why they would spend so much.
Right. I had someone told me that, nothing is impossible with enough time and money, but this might just be impossible with the amount of money and time that they are trying to allocate for this. Yes, there's 85 million allocated in the One Big Beautiful Bill, and only 5 million for the transfer. But the Smithsonian, which seems to be the target of this transfer, has estimated about 50 to 55 million for the transfer, and then upwards of $300 million to prepare the transfer, to come up with a new exhibit, and to display the vehicle at its new location in Houston. And then there's also just the concern of what's going to happen to the shuttles during transit. They're very delicate. They're covered in these very delicate tiles that were used to keep the vehicle from overheating when it came back to Earth from space. And so the concern is just moving that. Those tiles would probably be irrevocably damaged, and that would, be destroying a national asset, essentially.
About national assets right now, of course, we now think about the money being spent on sending actual shuttles into actual space at the here and now. Lauren, what did you make of the SpaceX delay?
Yeah, having covered space launches for however long I have, there's just one thing that companies can't control, and that is the weather. And so as much as you might like to fly, they had the wrong kind of clouds over the launch site last night, and so that forced a delay. But hopefully the weather will cooperate tonight, and we'll maybe see a liftoff of that 10th flight that we've all been kind of anticipating for a while now.
Lauren Grash, keep us on tenterhooks. We thank you for it. Now, coming up, take a look at the shares of these software companies, some of the worst performers year to date, but we're talking all about AI disruption fears that are fueling this decline. And also, what some earnings we're about to get after the bell tomorrow could say about software demand. This is Bloomberg Tech. Time now for Talking Tech. First up, EssilorLuxottica is said to be exploring a potential deal to increase its stake in Japanese optical equipment manufacturer Nikon. Now, according to people familiar with the matter, the maker of the Ray-Ban Meta sunglasses, they're considering boosting the stake in Nikon by 20%, up from its current holdings of 9%. Plus, Saudi Arabia's Humane. It broke ground on the first data centers in the kingdom. Now, the AI company has plans to have them up and running in early 2026 using semiconductors imported from the United States. Humane plans to add 1.9 gigawatts worth of data centers by 2030. And diplomats in Southeast Asia were targeted in a cyber espionage campaign earlier this year. It's according to Google. Now, the attacks used social engineering and malware disguised as software updates, and they're attributed to a China-linked group. A spokesperson for China's Ministry of Foreign Affairs said they were not aware of the situation. Well, from software updates to software disruption, AI disruption is creating a sense of fear among investors in the software sector. Companies like Salesforce, Adobe, ServiceNow are among the worst performers in the S&P 500 so far this year. Someone who's been writing about that is Bloomberg's Ryan Vlastelica. You're joining us on this software softness, but Ryan, this really is the agitation that we're seeing in Europe too, that generative AI is going to eat their lunch.
Yeah, absolutely. Thank you for having me on. This is a growing fear among investors as all these AI models become so prolific. They seem to offer all kinds of capabilities. The idea that you're going to continue using these sort of more niche software platforms, it seems a little bit iffier right now. Why would you pay for a second company if you're just using OpenAI or Gemini or some of these other services which can do all your coding, which can analyze your data, which can generate photos, which can do sort of back office and front office features, like all these kinds of things really makes a much bigger question. What is the growth going to look like for other software companies that aren't as big in the AI space? What is their demand going to look like? It has really been weighing on the stocks.
Weighing on the stocks already. And I think about, though, they've done a lot of talking to try and rectify that. Just think about how much Salesforce has been leaning into the agentic AI offering. What needs to turn this about? Because we've already thought about underlying fundamentals. Is it that earnings need to show growth and that people are going to stick with these offerings and products?
Yeah, so Salesforce reports next week, and that's going to be a very interesting report for what they say about what their growth looks like going forward, their demand trends, if they are seeing a lot of adoption of its Agentforce product and services. Right now, this is the kind of company, like you said, it's been very aggressive in AI. They've done a lot of acquisitions. They've really been sort of foregrounding their AI services, but it hasn't really been enough to support the stock. I think there is just sort of this overarching concern. How much competition are these companies going to face from AI? What does it mean for their stocks? What does it mean for their demand, their valuations? Right now, people are taking very much sort of a shoot first, ask questions later sort of policy on this.
Ryan Vlaselica, brilliant writing. We thank you for joining us on it. Let's stick with the impacts of AI demands on certain software companies and the infrastructure around it. Look, NVIDIA comes out after the bell tomorrow. But remember, Snowflake, MongoDB, they're on deck this week as well. Mandeep Singh, head of tech research at Bloomberg Intelligence, I'm pleased to say, is with us. So the overarching bellwether is, of course, NVIDIA.
Yeah.
And we're expecting the 50% ramp in earnings per share and more broadly in sales there. But are people too optimistic going into the print?
I mean, the framework that we have is we know about the demand side. CapEx expectations have gone up for 2026 from hyperscalers, so that's positive. TSMC isn't ramping up supply of CoWoS to not to the extent where they can solve all the supply constraints. Right. So all the setup that we have is good. The key vector for me is scaling laws versus reinforcement learning. Mm-hmm. Right now, what we are seeing is everyone has pivoted to reasoning models. In fact, Meta said they want to lease compute capacity from hyperscalers and focus more on reinforcement learning with the new superintelligence lab. I mean, that was Alexander Zhang's focus at Scale AI is reinforcement learning, data tagging for training. And so they seem to be moving away from scaling laws. At least that's how we are interpreting it. So from that perspective, it does have an impact on someone like NVIDIA if everyone has slowly started to shift away from training to more reinforcement learning. I think that will have a bearing.
But Jensen's spent a lot of time trying to say that inference is still their sweet spot, and that's not going to be an issue for them in terms of demand.
So let's put it this way. NVIDIA has 100% share when it comes to training, but when it comes to inferencing, they are in the 90s.
Oh.
So, and look, Google GPUs is ramping up. We know they're offering more capacity on GCP, so that's alleviated some of their supply constraints. But at the end of the day, training is where you need the highest performance chips. Mm-hmm. NVIDIA still makes those. But if the other players are able to take even 1-2% share, that will have an impact on NVIDIA's growth rates because they continue to raise the bar. I mean, you need to see the estimates keep getting higher. And look, there is the geopolitical aspect around selling to China, all that. But in the end, it comes down to what will be Blackwell demand and what will be Rubin's demand. And right now, all these models are trained on Hopper. So we want to know how big of a cluster there will be with Blackwell.
And then we think about the ROAI that everyone's been nervous about in the last few weeks. We think of Palantir's beat up a little bit. But push us forward to what the ROAI is for these software names that are coming out. The Snowflake has been leaning very much into AI, but is it managing to keep its customers happy?
I just can't make sense of the difference in valuation for Snowflake versus Palantir when both of them have a similar growth profile. Yes, Palantir probably has seen more with AI pilots, but Snowflake is a growth company. They've got a big customer base. So from that perspective, why can't they lean in on AI models and do something similar to Snowflake, to Palantir? I don't understand. Same thing with MongoDB. And it sounds like the stack is changing with AI agents. In fact, one anecdote I heard was 80% of new databases are being created by AI agents. So you're not creating databases for manual human transactions. It's the AI agents creating new databases. Now, that does impact someone like MongoDB in a big way because if they need to be part of that stack. And so I think in the end, it comes down to how you integrate large language models.
We'll see how those earnings come out this week as well. Bloomberg Intelligence's Mandeep Singh. Always got great takes. That does it for this edition of Bloomberg Tech. Don't forget to check out our podcast. Find it on the terminal, as well as online on Apple, Spotify, and iHeart. This is Bloomberg.